Dear students, warmly welcome all of you all. That's mean the SL3 corporate taxation paper. The student who are doing the corporate taxation paper for the June 2021 examination, all of you all warmly welcome for the theory session discussion of the SL3 corporate taxation paper. Okay, actually what is the main focus of this discussion of theoretical areas relevant to your examination paper. This is, to be honest, within the time period, I cannot cover the entire theoretical, that means 100% of your syllabus as per the 2020 curriculum. Okay, that's the first message which I need to give it to you all. And secondly, I have selected the particularly very important topics when it considering your entire 2020 curriculum. Yes, I know entire topics are really important for your paper, without any doubt. And here what I have done, if I have analyzed the entire webinar series for your after this 2020 curriculum, in that if can you remember the previously I have done a revision session. In that revision session, irrespective of the discussion of the question, some the theoretical areas I have discussed amalgamating with the questions. In that session, the main focus was to discuss the pilot paper, the Q&A session, the questions and answers in the pilot paper. But other than that, when it comes to that question discussion, taking the time, we have done past papers as well as we have discussed the theory or theoretical areas relevant to the past discussed. For an example, can you remember if it is for the value added tax, not only the question, we have discussed the past paper questions as well as the important theoretical part with reference to value added tax. As well as if I have taken tax planning and advising part, what is the transfer pricing, what are the sections relevant to transfer pricing, and we have amalgamated it to the question. And again, which is your 30% area, the company taxation part of it, in that also whether it is allowable, disallowable, all these adjustments with the theory background I have discussed. That was my part for that revision of the corporate taxation paper. Other than that, there was a theory discussion has been done by a particular another lecturer, and in that time also the lot of theory areas captured and it's delivered to you all. This is a reminding for you what we have done past. And today we are starting with that as a continuation part of that, the revision as well as the theory. In that, today is the first step to discuss the theoretical part. I am again coming to the first area which I have stopped, which I couldn't do the all the 100% of the syllabus. Therefore, I have selected it with the past. You have some knowledge gathered. Then with that knowledge gathered, from today I am starting as a continuation of that revision as well as theory, which the previous webinar stopped. As a continuation of that, today I am starting the theoretical discussion of your syllabus. Then after discussing these theory areas, very important theory areas, not the all, after that we will come to the revision part of it, which is the question discussion area. Okay, then from today we are starting theory session for June 2021 examination. In that not 100% theory. If I have now from this to I am the shifting to the our main curriculum. In that curriculum, we'll take in that curriculum, I will explain what are the areas which we are going to discuss. Okay. Now here if you have taken your main curriculum, this is corporate taxation syllabus under 2020 curriculum, which is testing for your June 2021 the corporate strategic level examination without any without amalgamating any proposed changes. Still these are in the committee stage the approvals, therefore that particular changes are not tested in your paper. It has communicated by the CA Sri Lanka to all the students. Okay. Then if I have taken your entire curriculum, now income tax liability of a resident company, I am not going to do. But don't worry, in the revision session, I will take questions and we will do. But as far as the theory concerned, I am not going to discuss this 30% syllabus area because doing a pilot paper and the the online examination paper discussion, mock paper discussion, you have hammered these areas. Okay. Then taxation and business decision making, we will come to this part at the most of the cases in the revision session, not in the theory part. Taxation of non-resident and international taxation, which is covering 15% of your syllabus. Lamai, I thought that it's good to take this 15% syllabus area and discuss with you all, because other than practicing the same questions which you can attempt in the paper, I thought it's good to have a wider discussion on this non-resident taxation and the international taxation. Why? You know what's the reason I have selected this topic? Because it's a section 1. Now you all know the entire format of the paper, and in that paper, in the section 1, question 1, in most of the cases, section 1, question 1 for 25 marks is testing taxation of non-resident person and international taxation. It's a compulsory question. In your paper, no selections. You have to answer, or you shall answer all the questions asked in the paper. Is it? I think I'm clear to you. Then if I have taken the entire paper, among you all, most of the students are telling this non-resident taxation question is really difficult. Yes, I know it's difficult, but you should attempt to that question, and if as a student, if you can confidently compute the income tax liability, confidently answer of the question with reference to tax issues asked by a resident person, why don't you try on a tax computation and the question asked on behalf of a non-resident person? Why can't you do that? The first thing you can. You have to take it into your mind, I can do this. Then if you have know the entire theoretical part of it, and secondly how to apply this to given scenario, then no harm, you all can obtain entire marks. If it is a 25 marks, at least a 22-23 marks you can obtain with reference to this 15% syllabus area. Okay, that's the main focus, to you to give at least confidence on to facing this non-resident taxation part. Okay, that's the first discussion I am going to have with you all, and second one is the statutory provisions and case law, which is covered in your 10% syllabus area. When it comes to statutory provisions and case law, tax administration part, then the payment of taxes, what are the type of assessments, and how the due dates of filing income tax returns, and the penal provisions, all these things are under this statutory provisions plus case law. When it comes to case law provision, it's under the different topics. For an example, the adventure or nature of concern in the business, and whether this expenditure incurred for the production of income or not, whether third category, whether these expenses are capital or revenue nature, and finally meaning of the plant. Under these 4 categories there are a list of the case laws. Again, I am 100% trying to cover in this tax administration part with reference to payment of tax sorry, assessments and all these areas. In the case law provisions, we will take the past paper questions and we will discuss it in the revision session. Okay. Then next my key area is the tax planning and advising, which is your 10% syllabus area, talking about the tax exemptions, transfer pricing, because my key main thing is to discuss the transfer pricing, not to all but very important aspects of the transfer pricing gazette notification and the tax exemptions and how it applicable for your paper. Okay. Then from your syllabus, these are the areas which we are going to discuss. Okay. Then contemporary issues in taxation, since the recent changes which is under proposed changes are not testing, then this 10% area more or less irrelevant for time being. Okay. Then from this, if we go on for the entire syllabus area, income tax liability of a resident company, Putha, I am not going to discuss this. Then taxation and business decision making, even the company taxation, this 30%, I will do a question in the revision area. Since this theory and revision is combined together, then I should have to give a particular understanding to you on our scope of this discussion. Then tax planning and business decision making, mostly tested in your question 3 of the paper in the section 2. Then it is again I am doing it with the as the revision program, under the revision program. And taxation of non-resident and international taxation, which is your 15% syllabus area, which I really want to go to the in-depth. And first we will look at what are the sub-syllabus topics you should know. Come to this part, which is I have taken extract provisions as per your syllabus, then we will discuss. What is the knowledge component? It is assessing income tax liability of a non-resident person. I will explain when it comes to the non-resident person, it's an individual and company both. Then what are the learning outcomes you should know? In that, interpret the meaning of resident status of an individual or a company for tax purpose. First you know whether this company or whether this individual resident or not. Secondly, explain statutory provisions with regards to establishment to the extent that the income arises in or derived from source in Sri Lanka, which is in your Inland Revenue Act. Which is in the Inland Revenue Act, it's talking about the section 73 of the Act, talking about the source principle, which residential status talking about in section 69. Thirdly, assess the income from the employment, business and investment of a non-resident. Where are these business, employment, investment, where are these income sources in the from where you have learned these things? Section 4, assessable income. assessable income. Then that same provisions which you have applied to a resident person, then according to the other provisions and amalgamating with other provisions is applicable to the non-resident person also. And finally, assess the taxable income and tax payable thereon by a non-resident person. The ultimate objective for you to compute the income tax liability of a non-resident person. Explain the liability of an agent of a non-resident person. When it comes to this area, lamai, explain the liability of an agent of a non-resident person. When it comes to this area, this has tested frequently. This has tested. Dependent agent of a non-resident person. Based on the dependent agent of the non-resident person, how that non-resident person is the earning or deriving income from our country, the Sri Lanka. These are really important. Then next part of the discussion of the non-resident taxation, the learning outcome is the remittance tax. When you are remitting profit to outside Sri Lanka, what is the applicable tax? Okay, explain the liability of a non-resident company for tax on remittance. This remittance tax, which is described under section 62, only applicable for the companies. We will come to all this, but I really need to give the at a glance picture of what are the expectations from the non-resident taxation. Next one, compute remittance tax payable by a non-resident company, the assessing of the liability and what is the payable amount you have to compute. Double taxation treaties. Lamai, what is our topic? Our topic is section under the 15% syllabus area. It's a taxation of non-residents and international taxation. Now, when it comes to the international taxation, the double taxation treaties are really important. Why it's really important? Because a double taxation treaty is superseding the Inland Revenue Act. Double taxation treaty is superseding the Inland Revenue Act. Section 75, it's giving the guideline on that. Therefore, if you have taken your entire papers, then the question is based on a particular double taxation treaty. It's key in your syllabus. Okay. Then after that, what's the double taxation treaty? What is the learning outcome? Explain the issues of overlapping tax jurisdictions and methods of avoiding double taxation. How to avoid the double taxation. All the guidelines given in the particular DTA. Explain the main differences between the OECD model and UN model of tax treaty. The particular two different models when developing the double taxation treaties. Then main differences of these two models. Okay. Then after that, the outline the principal aspects of the operation of a double tax agreement, knowledge of a specific double tax agreement in as required. But Lama, you can see here in the curriculum it has not given the double taxation treaty between Sri Lanka and India will be tested. The double taxation treaty between Sri Lanka and Singapore or Sri Lanka and India will be tested. No. Therefore, any double taxation treaty between Sri Lanka or whatever country can be tested in your paper. Is it harmful to you? Not at all. Why? The annexures of the particular testing double taxation treaty is given to you as an annexure to the paper. Only thing, Lamai, before the examination, you should be familiarized with the whatever the double taxation treaty. And you should know how to apply that knowledge to your paper. That's the only thing. Clear? Then, that's all about the non-resident taxation. And our next topic is statutory provisions and case law. In that, as I have mentioned, case law provision corrections I am going to discuss under the revision session. In the theory, I am coming to this statutory provisions 4.1 area, which is knowledge component, statutory provisions, learning outcome, outline the provisions of the Inland Revenue Act with regard to taxable sources, returns, assessments, time bar provision, finality, the administrative review, appeals and penal provisions. Next one, outline the procedure in making a valid request for an administrative review, for it is an appeal, and the settlement procedure including appeals to the Tax Appeals Commission. Done. Next one, outline the procedure of payment of tax under self-assessment scheme, repayment of tax, recovery of tax in default and penalties for non-compliances, and outline the statutory provisions applicable to recovery of income tax. All these 1.5 to 1.4, 4.1.1 to 4.1.4 I am going to discuss with you all in a highly in a theoretical area. After the non-resident taxation discussion, I will come to this area because I think it's very easy for you all. Then you can, the act is with you all. This is an open book referential for you all. Therefore, the particular provisions you can tag it, highlight, and whatever the particular separations you can do. Okay. Then next discussion of ours is the value added tax with the question. I will come to you, but not the theoretical area. Then tax planning and advising, again 10% area. Why I have selected this? Because this is combinedly very important for your section 3. Section 3 may be for your computation of resident company taxation correction, which is income tax liability computation, as well as for your business decision making area. This is highly linked. Therefore, to know this theoretical area is very important to properly face to your paper. Okay. Fiscal incentives, what is a knowledge component? Fiscal incentives and limitation. Outline major tax holidays. These are in the transitional provision, gazette notification, these are mentioned. Again, section 3 of the act, which is talking about the exemptions, and again the second schedule and sixth schedule talking about the temporary concessions and the enhanced capital allowances. Okay. Outline major tax holidays, exemptions and other incentives granted under the Inland Revenue Act and the Board of Investment Law, covered both. Then the proposed alternative tax incentives for a given situation and their limitations. And next one, it is on, basically it's on the tax concessions part of it. And transfer pricing, really important. Wherever in your paper this can be testable. Explain statutory provisions relevant to transfer pricing. See, include in a particular gazette notification which concept of the transfer pricing, the arm's length pricing is describing. That gazette notification is really important to you to know what are the pricing methodologies, at what situations transfer pricing disclosure form we should submit, and all the transfer pricing particular guide, at what time we are going to submit. All these things are really important. Okay. Next part of it, the critically analyzed pricing policies applied by a business in a domestic and international transaction, which is talking about section 76 and section 77 of the Inland Revenue Act. Then tax planning. Now you know, okay, there are exemptions, there are fiscal incentives, transfer pricing methodology. Using all these things, how are you going to plan your tax? This is not to evade your tax, but to not to non-compliance with the tax law, but how to plan from day 1 to in the continuing basis. Okay. Compile effective and legitimate plans and measures for business in order to minimize tax expenditure under given scenarios. that's why Lamai, I have told this tax planning is combined with the business decision making and the question can be asked. That's why this theoretical knowledge you should know. And next one, 6.32, critically analyze policies, arrangements and agreement of corporate and individual taxpayers with their exposure to discharge under the clause artificial or fictitious transaction. Any transaction, if it is artificial or fictitious transaction, if it has identified by the particular authority, you are penalized with it. The particular penalizing provisions are very clearly, it is in the Inland Revenue Act. Therefore, the arm's length pricing, that arrangements are really important. It's section 33 very clearly talking about this artificial and fictitious the arrangements. Okay. Then providing tax advice. Now, based on all these things, how in your paper, how are you going to provide a tax advice? Compile solutions for tax issues raised by tax authority, it's a one part. Advice for various patriarchal tax issues including assessment, interpretation, recovery, penal provisions and all this. Communication, compile report. If you have analyzed your paper, the examiner is repeatedly asking, compile a brief memorandum. Then this type of things are tested in your examination. Compile reports and other formal internal and external communications with regard to tax planning measures and advising. Now see, when it comes to tax planning, it combined with the tax, the business, the advising part also, the decision making part, as well as this again tax administration part also, because in here see advice on various patriarchal issues, assessment, interpretation, all these things combined. Therefore, you should know the link to the paper and you should know how, if an examiner asks a question from these areas, the taking the advantage of combination of all these areas, how am I going to write a good answer? That's the ultimate objective for these two topics. My calculation part of this under this tax planning and the tax administration part, calculations are very less. You have to write your answer. With reference to non-resident taxation, calculation plus you have to write a good solid answer. Okay. Then these are the three main topics I am going to cover in under the discussion of the theory discussion with reference to the SL3 corporate taxation paper, as the focus is for June 2021 examination. Once the theory discussion over, I will move to the revision part. In the revision part, don't worry, I am covering all the questions in your paper, taking maybe from the revision kit, maybe from the past papers. We will cover one company taxation question, one VAT question, one non-resident taxation question and cover other area. Okay, that's the plan. Now I have discussed our background and scope. Now here we go for our discussion. Okay, now I am again come to the main discussion of this. In that we will start our discussion session. This is strategic level corporate taxation summary of the syllabus. We have discussed this very particularly, and then theory session outline. These are the three topics I am going to discuss with you all. Taxation of non-resident and international taxation, which is your 15% syllabus area. Statutory provisions and case law, 10% syllabus area. Tax planning and advising, 10%, as I have discussed in detail part of it. Then non-resident taxation, which is 15% syllabus area. Under this 15% syllabus area, I am going to discuss these topics. First one, let me explain this one by one, then I will move to the wide explanation on this. Okay. Assessable income of a non-resident person, Section 4. Resident person, to determining the residential status of a person, the individual or else company, Section 69. Source of payment, it's a really important, if you are referring to this material, put asterisk mark, it's a very important source of payment, Section 73. Next one, foreign source, Section 74. And head office expenses, Section 79. Tax on remittances, Section 62. Then withholding tax provisions to non-resident person, particular withholding tax provisions, Section 83, 84, 85 and 88 plus the first schedule, para 10, the particular rates are there, and again there is a gazette notification with reference to the Section 85, which is the specified fees. Okay. Foreign tax credit, Section 80, taxable income and applicable rates to non-resident person. One of the ultimate objective to compute the taxable income and compute income tax liability. In here also there is a case law provisions. The two case law provisions are there, Chiviers and Sons Limited versus Commissioner of Income Tax, and next Anglo-Persian Oil Company versus Commissioner of Income Tax. Okay, here these two case laws talking about what? Talking about Lamai independent agent and the dependent agent. See, this provision has established in your curriculum. The regularly questions are tested, and with reference to that, very famous two case law provisions are included. Now, based on that, you can understand how it's important. Finally, double taxation agreements and mutual administrative assistance agreement, Section 75. Ultimately, your the answer should be, or your opinion, recommendation, advice, or rather decision should be based on the double taxation treaty. Why? As per Section 75, the subsection 3, it's very clearly provided that the double taxation treaty always supersedes the Inland Revenue Act. Okay, then it's a I have to make the correction, 75 subsection 2, Section 75 subsection 2. It's very clearly talking about the double taxation agreement every time supersedes the Inland Revenue Act. Therefore, your answer should be based on the DTA. Okay. With this understanding, Lamai, we will go to the main discussion of the subtopics of the non-resident taxation. We will have a mind map on this as usual. Then you can understand what are the key areas, and I will provide the explanations on this. Okay, this is our main topic, which is non-resident taxation. Non-resident taxation, which is your 15% syllabus area. In that, these are the key things you should know. These are the key things you should know. In that, the first one is the imposition of income tax. Imposition of income tax for non-resident person. I have used NR person. Non-resident person. When it comes to imposition of income tax, imposition is coming from where? Section 2 of the Inland Revenue Act. Section 2 of the Inland Revenue Act, and again it's Section 4 talking about on non-resident person, how the income tax liability is arising on taxable income, taxable income is comprising 4 main sources. That's mean after deducting particular qualifying payment and all, before that it comprising 4 main sources: assessable income from business, investment, employment and other. Then this section 4 and section 2 really important when it comes to the computation of the or imposition of the income tax liability of the non-resident person. Okay, when it comes to non-resident person, now you have seen in the curriculum it is talking about 2 non-resident persons. The one is company, second one is the individual. Now Puta, you will think that the individual taxation is nowhere in the syllabus. Then how this is coming? No, it is in your syllabus. Even in the business decision making, even in the tax planning, the individual taxation highly testable. Then you may think that okay, the main part is the resident company taxation, then where we should learn about the individual taxation. You can. How? The lower level, which is your BL7 paper, individual taxation, the majority part is discussing. Brought forward knowledge of this individual taxation is highly important when it comes to your upper level. Don't forget. Okay. Then it is company and individual. Now what is this section 2? This is our charging section. This is charging section, and section 4 is for assessable income. Assessable income. Section 4 is for assessable income. Done. Then assessable, when it comes to this charging section and assessable income, you should know this. What you should know? It is the residential status. Based on the residential status, based on the residential status, this chargeability is going to differ. Okay. Then residential status, where it has mentioned in section 69 of the Act. Section 69 of the Act. Now since I have explained this residential status with that, we will come to this residential status. According to that, we have 2 persons. One is resident person. Resident person. According to section 69 in the Inland Revenue Law, we have resident person. And again we have non-resident person. Non-resident person. When it comes to resident person, income wherever arise, income wherever arise shall be liable to pay tax in Sri Lanka. Wherever arise, for your easy reference, I am taking the resident person, the global income. The global income will be taxed in Sri Lanka, or a world income. We will take this world income will be taxed in Sri Lanka. World income will be taxed in Sri Lanka. Done. When it comes to non-resident person, what is that? It is to the extent that income arises in or derived from, I am highlighting one word, derived from source in Sri Lanka. Source in Sri Lanka. Then what? Why you should determine residential status as a resident person and non-resident person? The main intention is, for the resident person, world income will get taxed. For non-resident person only the source principle ලංකාවේ ඇතුළතදී උපයන ආදායම විතරයි. The tax for non-resident person. This is two main difference you should very clearly know as the first step. Clear? Okay. Then when it comes to now assessable income, all of you all know what are the sources of assessable income? The assessable income from business, investment, employment and other. With reference to even a resident person, even non-resident person, the same assessable income is applicable. Okay, the same assessable income is applicable. The source principle is we need to talking under the section 73. When it comes to that discussion of the syllabus area, I have mentioned this section 73 is really important. Okay, then after that, when it comes to non-resident taxation, non-resident person, we are talking about again the under the person in your syllabus, the non-resident company, non-resident company, which is under section 69 subsection 4, and the non-resident individual, NR individual. It is under section 69 subsection 1. Section 69 subsection 1. Okay, this is one of the broader view of the non-resident taxation in first I have to provide. Clear? Okay, then first thing I will come to again how the flow of this. Before that you should understand these sub areas. Okay, then the second point I am going to discuss with you all. The second, first thing is imposition. Second one I am linked to here, determining of residential status. Residential status, it's talking about under section 69. Talking about the under section 69. Again I am coming to this, two persons, company and non-resident individual. This is section 69 subsection 1. This is section 69 subsection 4. Okay. Now when it comes to this, there is another core topic which is changing of residence. Changing of residence. In practically, most of the cases it's happening to individual. Then I am discussing it under the explanation I will provide under individual part of the discussion. Okay. Then this is in section 70 of the Act. Section 70 of the Act. When it comes to changing of the resident, the definition of domestic asset. Domestic asset, which is defined in section 195, really important. Okay. Then there is exclusion for the domestic asset, we will discuss under section 70. Clear? Then the third one, very important, which is source of payment. Source of payment with reference to non-resident person, which is talking under section 73 of the Act. I will discuss A to Z of this source of payment. Okay, it is for you all. Then source of payment, when it comes to source of payment, the four sources of assessable income, it's really critical What are those? Business income, investment income, employment income and other income. Okay, then these are the four. Again these four we have to, I will take this, I think it's understandable to you, the individual and the company, non-resident individual and non-resident company. Okay, then when it comes to non-resident company, you should know about the remittance tax. Remittance tax under section 62 of the Act, the remittance tax and permanent establishment. Here Sri Lankan permanent establishment and foreign permanent establishment are there under the Inland Revenue Act, and again in the particular double taxation treaty, definition of PE is there. Permanent establishment you should know, even in the company and individual PE is applicable. Then next thing is a head office expenses. Head office expenses. The head office expenses talking under section 79 of the Act. The ultimate objective here with the source of payment and all these things, then from link to 1, 2 and third one, ultimate objective is the computation of income tax liability. Income tax liability of the non-resident person. For income tax liability, before that you should know taxable income. Taxable income. Okay. This is the first three main parts. Then I will erase this point number 1. Then after that I have enough space to come for the point number 4. Okay. Then under the point number 4, after the source of payment, you should know if there are source of payment, what are the withholding tax provisions applicable under local statute. Withholding tax provision. Withholding tax. In that there are final withholding payments, final WHT and non-final. When it comes to final withholding, it's talking under section 88 subsection 1D. It is non-final other than covering under section 88 subsection 1D, then other than that all are non-final. Under this withholding taxes, section 88 here, then section 85 and the section 83, section 84, and for all these things with that section, the first schedule, para 10 and the Gazette notification. The Gazette notification issued on section 85 with reference to specified fees. Okay. Then let me erase these things. After that, now source of payment, you know. For that source of payment, particular withholding tax rates applicable, you should know. Then the next part is the after this one. After this one, the local statute. Now you have to look at international taxation. International taxation. In the international taxation, your main objective should be learning about the double taxation agreements, DTA, maybe between Sri Lanka and India, maybe Sri Lanka and China, maybe Sri Lanka and Singapore, whatever. Any knowledge you should have. Any knowledge you should have. Then, and finally, application to the given question. This is the important part. Okay. Then after that, this is we have discussed 3, this is 4, this is 5, and under 6th heading we are going to discuss about the case law provision. There are 2 main case laws as discussed for the purpose of independent agent and for dependent agent. In that first one, Anglo-Persian Oil Company versus CIR and Chivias and Sons Limited versus CIR. Then basically after this your discussion is ends, but I need to add as the 7th point transitional provisions. Transitional provision. The transitional provision gazette notification issued on 1st April 2018, there is a one provision for the Inland Revenue Act number, Inland Revenue Act number 10 of 2006, which is under section 83 for what? Percentage basis accounting. Percentage basis accounting. If a non-resident person has granted the approval under Act number 10 of 2006 to pay income tax on the percentage basis without preparing the financial statements, then this is continuing even after the 1st April 2018 or else even after the operation of the new Inland Revenue Act number 24 of 2017. Clear? Under this 7 different headings, I am going to discuss the non-resident taxation part with you all. Okay? These are the subtopics you should know. Now you all having the entire syllabus. What is this? Secondly, discussion area, what we are going to do. Thirdly, entire subtopics. You all having the entire subtopics. Okay? Now, before come to the discussion of theory area, what is this non-resident taxation? You should know it. The most of the students, they don't have a good understanding why this non-resident taxation is why this and how this inapplicable for our paper, the examination. Okay? Now, you should have this knowledge. This is the simple thing. You should have this knowledge as there is first thing is this. Okay? There is a person. There is a person. There is a person. In this person, first thing lamai, you should have to determine whether this person is resident or non-resident. Resident or non-resident. This is the first test. Now I am telling if there is a why there is a non-resident taxation area and what is the importance of this, and the background of your computations and your thinking pattern. Person, resident or non-resident. Person means lamai, maybe individual, maybe company in our syllabus. Now, if there is a resident person, you know how to compute income tax liability, you 100% you know about that. Non-resident, if there is a non-resident person, you have to apply. Now you have determined resident or non-resident. Now you have selected this person as non-resident person. First test done. How to determine resident or non-resident? Section 69 provision you have applied. Then you have selected the person as the non-resident person. If he is a non-resident person, then what your step? To identify income sources. Identify income sources. What are the income sources this non-resident person has, or what resident person has? Business, employment, investment, other. If it is so, for these income sources, then you have to look at the tax implication. What is the tax implication? Income arising in or derived from Sri Lanka. Source principle. As per source principle under section 73 plus double taxation treaty. What is the tax treatment on this? Tax treatment. What is the tax treatment? Really important. Why? This, based on this income or arrangement, the person shall pay tax in Sri Lanka. Clear? Then apply double taxation treaty. After that, for your answer, you can support your answer by case law provisions. Case law provisions if applicable. Now, there is a person, first you have determined whether resident or non-resident. Then from this person, what are the income arising in or derived from Sri Lanka to that person? These are the particular income sources. Then tax implication on that sources. How the tax implications is coming under what categories of income, and the income described in the double taxation treaty. Tax implication, it may be the permanent establishment. If it is under the permanent establishment as per double taxation treaty, you have to compute the business income like a company taxation, business income, investment income, all these things. If it is individual, then the individual taxation. If it is you have to determine based on that. If there is no double taxation treaty, what I could do? If so, you have to go by the Inland Revenue Act. Then from this area, you have to think and take your decision logically for your answer. Then case law provisions, after that the particular income tax rates. Income tax rates you have to apply. For an example, for a company, as per the first schedule particular tax rates. Secondly, remittance tax, and finally if it is for the individual, then the first schedule para 1 tax rates as the slabs for individuals, This is not only for the computation part of it. Again, when writing answer, you should do the same thing. Okay. This is the bigger picture of application of non-resident taxation. As much as possible I have explained, therefore please have these key points in your mind before I am entering into the theory discussion now. Okay, with all this background, now we are starting the discussion of the theoretical area of the non-resident taxation. Taxation of non-residents and international taxation. In that, as the first part, I am starting non-resident taxation. In that, assessable income of a non-resident person, section 4. Even the assessable income of a resident person, talking in the section 4, even the non-resident person talking about in the section 4 of the Inland Revenue Act. We will come to this. The income tax chargeability of the person depends on residential status. That's why first thing you have to determine whether this person is resident or non-resident. As per section 4 of the Act, it depends on residential status as per section 4 of the Act. According to section 4 of the Inland Revenue Act, assessable income, in that the assessable income of a person for year of assessment from employment, business, investment or other source shall be equal to A. In the case of a resident person, the person's income from employment, business, investment or other source for that year, this the very important, wherever the source arise. That means the global income or world income of a resident person will be taxed in a country where he is resident. That means in our law it's Sri Lanka. Part B, in the case of a non-resident person, the person's income from the employment, business, investment or other. See, for even for the non-resident person, the same income sources. Here, to the extent that the income arises in or is derived from, underline or highlight this one, source in Sri Lanka. Then for with reference to non-resident person, we are not looking at the world income. We only looking at the source principle, the source of payment. Lankavedi uppayana lada adayama. It's only that. Explained under section 73. Okay, as the session 2 discussion, we will come to the section 73. Then therefore it is very important to determine the residential status correctly to compute income tax liability of a non-resident person. The why we should identify the residential status, come to that. Importance of identifying residency status of the person, number 1, to confirm residence principle and source principle. Why? Based on this, income tax liability will change. For resident person, different calculation. For the non-resident person, different method of calculation, but is based on the assessable income. Now lamai think like this. Now lot of students are thinking that for resident person, you all the 100% know how to compute income tax liability. For resident company, I will take an example of resident company. You all 100% know how to compute the income tax liability of a resident company. But when it comes to non-resident person, you all thinking how to do this. What are the adjustment I should do? Don't think like that. The business income computation for the resident person, allowable, disallowable expenses according to main deduction rule, the general deduction rule and specific deduction, it is applicable for the non-resident person also. It is not a rocket science for the non-resident person. Therefore, please have that gravity in your mind. The same way which you are computing business income, there are little changes. Other than that, the basic method is the same. Therefore, practice and think logically on this area. Second point, as the importance of the determining of residency status. To determine foreign tax credit, it is in section 80 of the Act, the foreign tax credit for the resident person. Okay. Third one, to provide the benefit of personal allowance. The personal allowance benefit goes to resident and citizen individual. Then to determine that, this principle is really important. To determine final withholding payment for resident, final withholding payment under section 88 subsection 1A, B and C is different, and for non-resident persons different. Okay. Then these are the little analyses of the importance of the identify the residency status. Now I am starting from the one of the key main topic under non-resident taxation, which is determining of residential status under section 69. In that I am first going to talking about the residential status of the individual. Come to that. In here we are going to study on residential status of an individual as well as a company. In that first part, determining of residential status of an individual, the subsection section 69(1). Okay. Please have your concentration on this. In the context of individuals, this is not the provision, this is my explanation, then after that I will come to the provision. In the context of individual, there are two primary tests of residence and two residual tests, the four things, 2 to 4. For employees of the government and individuals working on Sri Lanka ships, for them government, the employees representing government of Sri Lanka and individuals working on a Sri Lankan ship, for them it's a residual test. For two primary tests, again is one is quantitative, other one is qualitative. We will come to that. One of the primary tests, I am talking about these two primary tests. One of the primary tests is qualitative in nature, that is based on facts and circumstances. And one is quantitative, you have to calculate. By calculating 183 days of physical presence during a 12 months period. This is again a summary of the section 69(1). We will come to the four different situations described in section 69 subsection 1. An individual shall be a resident in Sri Lanka for a year of assessment if the individual. Now Lamai, you can see the section 69 subsection 1 provision is talking about an individual shall be a resident in Sri Lanka. An individual shall be a resident in Sri Lanka. Okay. That means if this condition satisfied, that particular individual is resident in Sri Lanka. If these conditions are not satisfied, not a resident. Clear? Come to this. An individual shall be a resident in Sri Lanka for a year of assessment if the individual A resides in Sri Lanka. Qualitative nature. Resides, we will look at what's this. I will explain what is a resides mean. That means if you are living in Sri Lanka, your social interest, your family, the vital interest, everything is located to Sri Lanka. You are working in here, your parents are here, your wife, your children here, your social membership interest is here, your properties are here, everything located to Sri Lanka, thereby you are residing in Sri Lanka. But this has not defined in the act. Based on the scenario provided, you have to analyze the facts. We are ready to do that. Okay. Part B, an individual shall be resident in Sri Lanka for a year of assessment if the individual is present in Sri Lanka during the year and that presence fall within a period or periods amounting in aggregate to 183 days or more in any 12 months period that commences or ends during the year, which is quantitative nature. Come to this explanation. This is really important. Okay. Now we will analyze what is this quantitative test. Before analyzing that, come to this. Is present individual, he is a resident. If is present in Sri Lanka during the year and that presence fall within a period or periods amounting in aggregate of 183 days or more, 83 days or more in any 12 months period that commences or ends during the year. Lamai, this is not talking about the year of assessment. In this explanation, in the provision of the Act, did you see any within year of assessment word? No. This is talking about what? Any 12 months period. Any 12 months period. Any 12 months period, if in that period aggregate of how many days? 183 days. 183 days or more. 183 days or more. We are in the discussion of section 69, subsection 1. What is this talking about? For an example, think this. For easy reference, I am taking from 1st January 2022, 31st December 2020 of this 12 months period, a person from China, the arrived, departure from Sri Lanka more than or 183 days or more, for an example 200 days. If so, he is resident, the big R for him, as per this quantitative test. He is a resident. Now Lamai, you have to think little bit on this provision. What is you have to think? This is 12 months period. For our tax purposes, for this 12 months period, this is from 1st Jan to 21st Jan 2020 to 31st March 2020. This belongs to one particular year of assessment. For the tax purpose, it is 1920. And on the other hand, for 1st April 2022, next is the 31st March 2021. This is the next year of assessment. 31st December, sorry for this, 31st December 2021. I have analyzed the 12 months period. 12 months period. Then it comes to one is 1st Jan to 31st March 2020. Then next 1st April 2020, 31st December 2021. Again, this is come to the, for our tax purposes, year of assessment 2020-21. See this, I need for you to have a look around this. This 12 months period may be for the 2 year of assessment. Nothing to do, but the provision is there. This is not talking about the year of assessment, it is talking about the 12 months period. It is talking about the 12 months period. Am I clear? In that 12 months period may be fallen into 2 year of assessments. Done. That's the part B. C. These are the two residual tests which we have in this section 69 subsection 1 provision. in an employee or an official of the government of Sri Lanka and his spouse is posted abroad during the year. In this residual test, an individual shall be resident in Sri Lanka for a year of assessment if the individual in an employee or an official of the government of Sri Lanka and his spouse posted abroad during the year. If I am representing the government of Sri Lanka and due to that my employment, if I have living in another country, for an example, ambassadors in Sri Lanka, if they are representing the Sri Lanka in different countries, they have all the family is at that country. If so, can we tell, okay, this person 183 days or more, he is not in Sri Lanka, then he is a non-resident? No, even he has 4, 5, 6, 10 years, if he has in another country, according to this provision, he is not a non-resident person, he is a resident person. Why? He is representing the government of Sri Lanka. That's why employee or an official of the government in Sri Lanka, his and his spouse, the ship to abroad during the year, they are resident. Part D, an individual shall be a resident in Sri Lanka for a year of assessment if the individual is an individual who is employed on a Sri Lanka ship within the meaning of the Mercantile Shipping Act during the period of individual is employed. The ship is going around the sea. එතකොට ළමයි, now ship is covering lot of continents and the territories, countries, we don't know. If that person, individual, is employed in Sri Lanka ship under the approval or meaning of the Mercantile Shipping Act, even he has outside Sri Lanka, even for the 1 year, 2 year, irrespective of number of days, he is a resident in Sri Lanka. The part C and part B is a residual test. Even if they are not in Sri Lanka more than 183 days, or else then they are resident in Sri Lanka irrespective of the quantitative factors. Clear? Then B is for the number crunching, the quantitative factor. A is to analyzing the factor in the qualitative nature. These are the 4 factors. Now see, now I am asking a question from you. Is this talking about that? No, it's actually no need to ask a question. One of these conditions satisfied, that's mean if he is not resides in Sri Lanka, then non-resident. If he has in Sri Lanka in 183 days or less, sorry, less than 183 days, sorry, less than 183 days, if so, he is a non-resident person. Okay, then for C and D, residual test, without having considering part A and B of the discussion, even what period, if they are outside Sri Lanka, if this the condition of the ship and the official of the government, if they are satisfied, then they are resident in Sri Lanka. Clear? Then we will come to the Patrice question 1 of the discussion. With this numbers of the quantitative test, we will look at how it is, are we going to discuss on this quantitative test under section 69 subsection 1. Patrice question 1. Determine the residential status of each individual under following scenarios. In that first individual, Mr. Love is an Indian citizen and he came to Sri Lanka for the first time on 15th May 2020, and his travel details thereafter were as follows. He arrives to Sri Lanka 15 May 2020. Departures and arrivals 30th June 2020 and arrive again 30th September 2020. Departure 1st Jan 2021. Arrived 1st February 2021. Departures 1st May 2021. What is the position in the year of assessment 2021? What is the position in the year of assessment 2021 to 2022? Okay, this is the question determining of the residential status. We will analyze the question. This is Patrice question 1. I am going to discuss under section 69 subsection 1. Patrice question 1. Patrice question 1. Okay. Come to this one. This is Mr. Love, Indian citizen. Now we will look at his arrival details and departure and number of days. And number of days. He has arrived to first time on 15th May 2020. 15th May 2020. Departure is 30th June 2020. 30th June 2020. Then number of days 47 days. 47 days. Arrival date and departure date should be considered. Arrival date, and I am repeating, arrival date and departure date should be considered. Okay. Then again, number of days, we will check number of days in 12 months period. 12 months period. Number of days in 12 months, aggregate of 12 months period. Then he again arrived to Sri Lanka on 30th September 2020 and depart from the 1st January 2021. Then it is altogether 94 days. 94 days. How to compute 94 days? 30th September, October 31st, November 30, December 31st, January 1. September 30 means it's a 1. Okay. Then it's a 31. It's a 31, 31 plus 30 plus 2. It's altogether 94. It's an example which I can show you. Okay. After that, next, first arrived 1st February 2021 and departure has happened on 1st May 2021. How many days? 90 days. Now, we have analyzed the number of days. Now, look at Lamai. His first arrival has started on 15th May 2020. 15th May 2020. Now, what is the 12 months period? What's the section is talking about? Present in Sri Lanka. Period in aggregate of 183 days or more in any how many months? 12 months period that commences or ends during the year. See, commences from 5th May 2020 ending on which date? 14th May 2021, ending on 14th May 2021. Is this Mr. Love under that period? Yes. This is my 12 months period. This is my 12 months period. Okay. In that, here if I have taken February 28 days, March 31 and April 30, May, it's only one date. One day he has stay in Sri Lanka, 28, 31, 31. Here 90 days, that's how it's computed. Altogether 231 days. 231 days. Now you have to apply the quantitative test. It is what? 183 days or more. 183 days or more. This is okay. Section 69 subsection 1 provision is okay. He has stay in Sri Lanka 183 days or more. Clear? Now what is your answer based on this quantitative test? If so, is Mr. Love is resident or non-resident? Resident person in Sri Lanka. Now you have to look at that thing, that year of assessment analysis. My year of assessment, this is one period, this comes to 2021 and again 21, 22. Since this person, Mr. Love, has the stay physically in Sri Lanka 183 days or more within 12 months period, for the both year of assessment he is a resident in Sri Lanka based on this quantitative test. I think it's clear, okay? Now I have analyzed the question, analyzed the 12 months period, analyzed the tax implication. Now we will come to the answer. Now Lamai, as usual, I am telling, even from the simple question, you should know how to write an answer. See this answer format. This is, I am starting from the theoretical provision of the Inland Revenue Act. Then second one, I am always doing, before that Lamai, I am always doing reading the requirement of the examiner. That's the first thing. Now we have read it now. Then after that, we have to think about the answer format. Secondly, analyze the question. The second one also we have done. Third one, you have to think about the answer format. Answer format, where I am going to write in this answer, section 69, subsection 1 of the Act. In that, first we have to check the provision itself. Then we have to apply the given scenario to the question and the recommendation. The three simple paragraph. It's really nice when it looking at, then you should practice this properly, okay? Come to this. As per section 69 subsection 1b, resident person. Section 69 1b is section 69 is talking about the resident person, or rather residential status in that resident person. In that, how it comes to individual. An individual shall be a resident in Sri Lanka for a year of assessment if the individual is present in Sri Lanka during the year and that presence fall within a period or periods amounting in aggregate to 183 days or more in any 12 months period that commences or ends during the year. Now 12 months period commences or ends during the year. 12 months period commences or ending during that any year. It can be commence and it can be ends, okay. This is where I have taken extract provision of the Inland Revenue Act. Then come to second para, the application to the given scenario. Mr. Love has arrived to Sri Lanka for the first time on 15th May 2020. Accordingly, 12 months period ended on 14th May 2021. Done. As per above calculation of aggregate number of days during the above 12 months period, Mr. Love has physically present in Sri Lanka how many days? 231 days. Within that 12 months period, However, it comprises 2 years of assessment, 2021 and 21 and 22. Therefore, as per section 69 subsection 1 B, Mr. Love is resident in Sri Lanka. Mr. Love is resident. That's the key determination of us. The Mr. Love, it is Mr. Love is a resident in Sri Lanka based on section 69 subsection 1B, which is quantitative test. Resident in Sri Lanka for the year of assessment 2021, and it should be 2021 and it is 21-22. It is 21-22 both. 21-22 both. Okay. Then this is the answer discussion for that very small question. I think it's clear. Then next one, the question is analyze the income tax implication under following particular each individuals. Now the second part of the question, another individual, who is that? Mr. Suranimala is a citizen of Sri Lanka. ඉපදිලා තියෙන ලංකාවේ. And has been transferred by the head office of his employer to a new job in Malaysia in the month of June of 2020. He has a rental apartment in Colombo where his spouse and children reside. His motor car uses by the wife. However, he gives up his membership in social clubs in Colombo. He maintains a bank account in Colombo, it's having a LKRO, whatever account in a Colombo bank, where he deposits part of his salary to assist in supporting his family. What he is earning in Malaysia, he is sending to his family. He has purchased a home in Malaysia. Anyway, if he is working there, he has to purchase, or he has rented out, whatever, he has purchased a home. He comes to visit his family in Colombo one weekend in every month on school holidays. Then based on the availability of children and all, there he is coming. Mr. Suranimala's spouse has no intention to move permanently to Malaysia. Now, Lamai, this is one of the big story given about Mr. Suranimala. What the purpose of knowing about this Mr. Suranimala? To you to apply under section 69 subsection 1A the qualitative test for the check the residential status of an individual based on he resides in Sri Lanka, whether he resides in Sri Lanka or not. Okay. This is the qualitative test. So, why I have selected this? Because the resides in Sri Lanka, the wording has not defined in the act. That's why initially, which I have mentioned, you should go through the scenario and you have to extract the points from the scenario. You should be tactful on these things. Actually, Lamai, currently these things are tested in your paper. If you can remember in your online paper, this the particular area has little bit, not all, but little bit resides or not. These things are tested. Therefore, it's better that you should have the knowledge of all these things. Okay, we will come to the answer. I have analyzed the scenario. The answer for Patrick's question 1, that's sub question 2. As per section 69 subsection 1, determining of residential status of an individual, one important test is to check whether that individual resides in Sri Lanka. That's important. Resides in Sri Lanka, which is our primary test. However, this term has not defined in the Inland Revenue Act. I have mentioned that. Therefore, shall be analyze the facts of the given scenario. Now, we will analyze the facts. When analyzing the facts given with reference to Mr. Suranimala, he has a permanent home regularly available for use in Sri Lanka. You have to look at what is his permanent home. Now he has a home in Malaysia, he has a home in Sri Lanka. Then in that he is frequently coming to this Sri Lanka home, which is we can provide is he has a permanent home in Sri Lanka. Second one, his family permanently lived in Sri Lanka and do not have any intention to ship permanently to Malaysia. Where I have taken that one, it has given Mr. Suranimala's spouse has no intention to move permanently to Malaysia. Never, she is going permanently for that country. Then he has a next one, Mr. Suranimala's economic and social interests including dependence of the family with his economic support living in Sri Lanka. The entire family is living in Sri Lanka, they are not shipped to the Malaysia. Then Mr. Suranimala visits in Sri Lanka every month, frequency of visiting. Every month he is coming to Sri Lanka, maybe it's a high cost but he is coming. The most of personal properties of Mr. Suranimala located in Sri Lanka, bank accounts, car, apartment, everything. That is for the properties. Therefore, now we have analyzed the scenario. Based on that, therefore, as per the information provided, it was determined that Mr. Suranimala reside in Sri Lanka due to what? Due to his vital and social interest located in Sri Lanka. Now see Lamai how I have designed the answer as per the information provided. The resides in Sri Lanka, we have to analyze based on the information given in the scenario. Based on that only we can come to the conclusion. Sri Lanka due to his vital and social interest located to Sri Lanka. Accordingly, he is resident in Sri Lanka and his global income shall be taxed in Sri Lanka. Clear? Okay. This is analyzing on the section 69 subsection 1A which is talking about resides in Sri Lanka. Okay. All these are for you to think little bit about this non-resident taxation. Now I am going to, now we have discussed entire part of the determining the residential status of an individual. Now I am coming to next part is determining residential status of a company, which is section 69 subsection 4. This is little bit different. Now you have to take the important points of this. Come to the discussion of this. A company again shall be resident. Behema unnot resident. If not, non-resident. Okay. Shall be resident in Sri Lanka for a year of assessment if A. It is incorporated or formed under the laws of Sri Lanka. Incorporated or formed under laws of Sri Lanka. B. It is registered or the principal office is in Sri Lanka. For our language, the head office or principal office is in Sri Lanka or registered office is in Sri Lanka. Or at any time during the year, the management and control of the affairs of the company are exercised in Sri Lanka. Management and control exercised in Sri Lanka. Now you can see, Lama, if you have look at this A, B, C, it's not telling A and B and C. It's talking about O. If one of these conditions satisfied, resident. One of these conditions not satisfied, non-resident. Clear? Come to that bullet point. Accordingly, for company to be resident in Sri Lanka, one of the above conditions shall be satisfied. It's not all three, it's one of the above condition. I think it's clear. Now we will go to the next one because I need to exercise this. Management and control. of the affairs of the company are exercised in Sri Lanka. Now, incorporation, you all know, for be a resident company, you should incorporate a dual company, Companies Act number 7 of 2007, and registered and principal office. That also understandable. What is this management and control? We will come to next part, the description or elaboration of the what is management and control. In that, who are the managing party of the company, who are the controlling party of the company? Board of directors. You should know that. For the taxation, since this is a patriarchal subject, you should have a little bit of a common sense, a business sense, just you to think, and you should have a high level of accounting knowledge, and you should have a high level of the taxation knowledge. For that accounting knowledge plus taxation knowledge, you should have the small or a little of the common sense or a business sense. Okay. Then what is the meaning of the control, exercise in management and control? We will come to this explanation. For a foreign company, I have taken the management and control for the company. It's a foreign mean if it is a non-resident company. Control and management is very significant in determining the residential status of a foreign company. However, the term control and management has not been identified in the Act. It has not defined, like the resides, the wording of resides has not defined in the Act. Likewise, the management and control has not defined. Thereby need to apply what? General meaning. For a company, major decision making party is directors. Hence, the place where such decisions are taken is considered as control and management place of the company. Where the board of directors meeting, where the board of directors are taking strategic decisions with reference to the long term of the organization, then it is the country or a place where management and control exercise. Then that country, we have to consider it as a resident company, resident country of that company. Therefore, such company is deemed to be resident in that, even though its registered or principal office is situated outside Sri Lanka. If the management, control, management and decision making, key decisions are taken in Sri Lanka, we can take it as the resident company in Sri Lanka. Okay. Then we will come to the Patrick's question with explanation of the how to determine the residential status of the company. Like individual what we have done, we will come to the discussion of the question of the companies to be a resident or non-resident. Come to this. Determine the residential status of each company under following scenarios for the year of assessment 2021. As all of you all know, for the June 2021 examination, your testable year of assessment is 2021. Okay. Then we will come to the first scenario. First, second and third scenarios I will explain, and we will move to the answers. A company incorporated in Sri Lanka under the Companies Act number 7 of 2007 and registered office is situated in Sri Lanka. However, engage in offshore business. Think little bit. What you answer? As per this provision, what you answer? Is this company is resident or non-resident? Resident or non-resident? What you answer? This is a resident company. Why I am telling like this? See the information given, incorporated in Sri Lanka and the registered office situated in Sri Lanka, but they are doing business in offshore. It is necessary to determine the residential status of the company? the business they can do in the whatever country they need. But principal business, the registered office, and it is incorporated under company law. Nothing to think even. This is what resident company, where it's doing the business operation is not applicable. This is not talking about the management and control. Okay, Lamai? This is talking about the business. They are conducting offshore businesses. Lankawen pita business karanne. But it doesn't mean that on the management and control. You should be thankful. Then next one. No, we will come to the answer of this, and next we will go to the next question. As per section 69 subsection 4, determining residential status of the company shall be resident in Sri Lanka because it is incorporated under Companies Act and registered office situated in Sri Lanka, where it has mentioned section 69 subsection 4 para A and B. If I have again gone here, it's incorporated or formed under laws of Sri Lanka, registered office in Sri Lanka. Then the place where the business is carried is not a relevant factor when deciding the residential status. These are key points. Therefore, as per section 4, the global income of the company shall be taxed in Sri Lanka for year of assessment 2021. Am I clear? Okay. Then we will come to the next question. A software development company registered in China and develop ERP software solutions for Sri Lankan company during the year of assessment 2021. What's your answer? Software development company registered. That means it's incorporated in China. Developing ERP software solution for Sri Lankan company. Resident or non-resident? This is non-resident company. Why? The company has registered in China. They are only doing one of the part of their business in Sri Lanka. This is not a resident company. Come to the answer. As per section 69(4), subsection 4 as the determining residential status of the company, this software development company is non-resident company, since its registered or principal office situated where? Outside Sri Lanka. Further, since they are only awarded the contract in Sri Lanka, it was assumed that the management and control also exercised in the China, because we don't know, in the question it has not given. Therefore, not bad if you can put this type of assumption. Carrying out a project in Sri Lanka does not designing factor for residential status of a company. See how the flow of the answer. Now from this theory session, Lamai, the maximum advantage you should take. One is to understand particular key theoretical aspects of your syllabus. Second part is how you are going to write a good solid answer. It is the key with the understanding of the theory knowledge. Okay. The conclusion, therefore, as per section 4, what is section 4? Assessable income. The income arising or derived from Sri Lanka. Source income. Now in the first part, it's a global income. Second part, since this China company being a non-resident person, only income arising or derived from Sri Lanka under the source principle shall be pay income tax in Sri Lanka. Clear? I think it's clear. Now we will go to the third question. A construction company incorporated in India. From reading the first part of it, you can understand, this company incorporated in India, then most probably non-resident, but we will look at doing its business activities in Sri Lanka through a branch office situated in Colombo 3. Branch office is the extension of the head office. Okay, then they have formed a branch office in Sri Lanka, then continuing their business. There is an accountant, operational manager and project employees. To do that activities, there are 3 employees. All day-to-day operational decisions, read this question very carefully. All day-to-day operational decisions is taken from the operational manager in Sri Lankan branch office. You have to think, day-to-day operations. The decisions relevant to day-to-day operations are taken from whom? Operational manager. Other than that, all strategic decisions are taken from head office situated in India. While am I this much of information provided to you to think whether this is a resident company or a non-resident company? This is actually amalgamation of all that incorporated, formed and head office, the exercise in control. All this question 3 is amalgamation of all ABC. What's your answer? Is this resident or a non-resident? This is a non-resident company. Why? Incorporated in India, head office situated in India. The key management decisions, strategic decisions are taken from India. Clear? Then this is non-resident company. Thereby only the source of income is tax in Sri Lanka. Come to the answer. Answer for Patrick's question 1, the part, it's a continuation. It is as per section 69 subsection 4, sorry, it's a continuation of Patrick's question. The 2 is continuation of the Patrick's question 2. Then we will come to the answer. As per section 69 subsection 4, the company shall be non-resident for the year of assessment 2021. Non-resident for the year of assessment 2021. Why is that? Because it is registered and incorporated in India. That's the first thing. It is registered and incorporated in India. And all strategic management decisions, are taken from the board of directors at the head office situated in India. However, taking of operational decisions, or functional decisions from the manager in Sri Lanka does not lead to deciding factor for residential status. It's just routines, but strategic decisions are taken from the head office management. Therefore, branch office shall pay tax for any income arising or derived from Sri Lanka for the year of assessment 2021. Clear? Now, this is the analysis of that 3 Patrick's questions. Okay, with the today's discussion, we have looked into the non-resident taxation key subtopics, and in that key subtopics we have checked the residential status of the individual and the residential status of the company with Patrick's questions and the mind maps very clearly analyzed. I think it was a good advantage to you all. Then we will meet again with a particular continuation session of the non-resident taxation with the going forward as a theoretical discussion with the Patrick's question. Okay, thank you very much.